Hello, everybody. Jackson here with the Wealth Squad. Today we'll be talking about a couple of stocks that you should own when the market bounces back. These stocks will jump the hardest, the most, and it is especially important that you own them when they do so, because that's when a lot of the gains are made. And with a good price, you could ride that for months and double your money. That's what we saw in COVID times. If I don't have to remind you, any stock you bought at the midst of the COVID crisis, especially the crappy ones, the bad stocks, the low quality, they doubled within the next 2 months, right? Or, the next week or sometimes a couple of days. But we're going to be talking about some larger companies rather than just those crappy penny stocks. Of course, we're going to start with Boeing. Boeing, if you do not know, has been hit hard, of course, since the February 2019 date. And you can see right here, that was at 446. Right now, we're trading at 125. Okay, we're getting back to COVID crisis. You could see Boeing never fully recovered, only partially, and they got to 275. Now we're trading at 125, which is what it was trading for in May of 2020, back to COVID prices. So Boeing, whenever the market bounces back, you can see exactly just the power that this stock has. Just within the last couple of months, even after this bounce, it went from 125 to 172. That's $50 a share at 125, and that is a healthy margin of around 30 to 40% that you're getting. And that was in May, June, July, August. That's in 3 months or four or whatever. A 50% or $50 return on 125 in 4 months is beyond good. And right now we see a little spike, but don't be fooled. You want to wait for the best opportunity to strike. You can be patient. A lot of these times you can be patient. So that's Boeing. Boeing is number one just because it's a company that's been through a lot of tough times lately. It's kind of hard to tell where it's headed in the ultimate future, 5 years down the road. However, once this market recovers, we will see a nice return with our Boeing shares. Next, we're going to Square, or Block, I should say. Now, Square was a prodigy of the COVID crisis. You can see went from $80 to $30 real quick, lost $50 in a matter of, well, this is a week candle, so in a matter of 3 weeks, went from 80 to 30. And after that, I went from 38 to 270, right? 280. And this was, we see March, and we got March 1 year later, and we're at 250. So in 1 year, it went from 38 to 250. And that's not uncommon with a lot of these riskier companies. But regardless, it went back from 270s down. Right now we're trading in the 50s, right? And this is 2-3 weeks after the recovery of the COVID crisis with Square, back in the 50s. So who's there to tell us that Square won't bounce back? Maybe not to this magnitude, but a decent amount, right? We can see right here, within the last couple of months, it went from 60 back to 90, down back to 50. So we could go another 50 to 70, let's say. That's 40% just in a matter of a couple of months. And that, like Boeing, is probably not uncommon to see or rare. And that's Square. So that is something to watch out for. That's just a stock that's been beaten down almost beyond repair. And now we're waiting to see what it can do next. Talking of next, we're looking at Roku. Roku was also a darling of the lovely tech era of the after COVID recovery, after the COVID crisis. You can see this magnificent recovery beyond. So let's look at Roku. 120 before COVID, hit a low of 56, but around 70 was a 70-80 good range to buy in. From there, went from 80 to 480 in a matter of a year. So 80 to 480, up $400 with an $80 stock in a year. Okay, and that is a lot of money from a single $80 share. To be percentagely precise, we're looking at 500%. And since then, 500% gain, we're down 87%. What goes around comes around, it seems. So with this $480 stock, we're now buying it for $58 at the very, very bottom of this COVID deal. Now let's look at the earnings for this, because we need a reason for justification. Why is this happening? All right. So March 2020, well, there's earnings report in February, negative 13 cents a share, negative 45, negative 35, 9 cents a share. Nice, make money. 49 cents a share, 54, 52, 48, 17, negative 19, and negative 82. Well, now we know why, right? Now we know exactly why. We went from barely losing money, right? That's a respectable negative 45 cents a share, negative 13, negative 35, to breaking even, 9 cents a share, 49 cents a share, 54 cents a share, 52. So up 52 cents a share from negative 45 cents a share. And now we're back down to negative 82 cents a share. In this upcoming quarter, we are estimating negative $1.20 a share. No wonder, right? No wonder. Just follow the earnings and you will see the stock mirror that, right? But regardless, if the market bounces, we will see a bounce in Roku. It is not exempted from any market growth. However, that bounce that we saw with the other stocks, with Boeing and Square, you can't really see here. It's kind of been beaten down. It's a risky stock. Sure, it's a gamble, but I think with any market bounce, you will see this one bounce as well, with it being down, so many people underwater in this stock, and that's Roku. Lastly on our list is Wayfair. Wayfair was a absolute product of the COVID recovery, and I say this with very little hint of, I'm not going too far, right? It's purely what I'm seeing on this chart. So we see a very bottom price of $23, okay? $23 in the midst of the COVID pandemic, COVID crisis, news breaking, whatever. Recovered within 39 days. You can see right here, 26 bars, 26 trading days recovered. Since then, it went from 24 all the way up to 350, up 1,300%. And about a year since then, it's gone down 90%, back at $33, which we only have seen one other time besides, back in 2014. Back at $34, may I repeat. Let's follow the earnings on this one as well. All right. So we're losing $2.23 a share, quite a bit. Losing $2.80, losing $2.30, making money. Now we're making money, $3.13, $2.30, $1.24. It's going down, $1.89, 14 cents. And we're back down to losing money, down 92 cents, down $1.96, down $1.94. Upcoming quarter, we're losing $2. Follow the earnings and you will see a stock price that mirrors that, all right? So what we learned from Wayfair is essentially, once the pain sets in, we can see an upside. So what we see coming here soon is if the market bounces strong and an economic recovery is in place, Wayfair will be a very present recipient of its gain, right? Because we saw it recover from down from, what was it, $100 to $1.25, recovered in a month, and then went 1,300% up in a matter of a year. and now we're back down 90%, back at the lows. Now we've got to see what happens next with the market. It's kind of a macro effect now rather than individual company, because the company won't recover unless the market does, and the market will recover once the economy does, so to speak. But regardless, guys, these stocks will benefit the most from a bounce from a market recovery. Wayfair, Boeing, Square, and Roku. I hope you learned something from this video. Hopefully you learned that if the earnings are falling, then the stock is falling. That's just a matter of when and how much. So hopefully you learned something from this video once again. Thank you for watching. Until next time.